Hello, everybody. Welcome to another video. Now, in this video, we're going to be looking at two different things. We're going to be looking at the Black Friday deal that's about to happen, right? The link is in the description below. You're going to get 60% off for life on your monthly subscription from January 2025 onwards. Okay, but you can sign up now. You can reap the benefits of the program now. And it ends on December 1st. Okay, so the Black Friday deal ends on December 1st, where you're going to be getting the algorithms for $40 per month instead of the $100 per month from January 2025 onwards, right? So this is the early bird discount as well. So if you are going to get it, the link is in the description below. Okay. Now, once you do get it, once you do make the subscription, once you do enroll, just send me a message on Telegram and I'll get you hooked up to the system as soon as I can. All right. Now, the second thing is this. A lot of people, they have problems identifying the low of the day, the high of the day, and they also have a problem of identifying where I can actually put my targets, right? Because here's the problem. The problem is when you're looking to take trades, right? When you are looking to take trades, you see price and you don't know if this is the low of the day. Maybe it will go one more time and then it'll go up. We don't know that. I mean, I won't say we, some of you guys don't know that. That's a lot of the traders have this problem. Okay. How do you know that this is the low? How do I know that this is the low? How do I know that this is the high? Right. So these are problems that a lot of traders have. So what I have done is I have added another algorithm into the TradeEasy suite of algorithms, right? So what I have done is I activated the statistical distribution and manipulation levels, right? Now, I understand that there is another one already like this in the market, but this is better. Why? Because this comes with a lot of other algorithms that will definitely help you make the most optimal decision that you can make. Okay. So, for instance, you have the statistical distribution and manipulation levels based on the 6 o'clock opening price, and you also have the statistical distribution and manipulation levels based on the midnight opening price. So today is still running. Let's go to yesterday's price action, for example, on Bitcoin. And you can see that right now, this is drawing based on the previous day. You need to wait until 12 o'clock. So let's look at the daily opening first. Here, the daily stats. By the time we come into the 6 p.m. opening price, we're going to get the manipulation level, the bearish manipulation level, the bullish manipulation level, and also the potential distributions. Okay. Now, what can we see? We can see that price manipulated into the low. You're going to find liquidity, POIs, whatever, based on this level, around that level. And then you're going to buy until the distribution, which is here. Okay. You're going to buy until the distribution right there. And you can see once price hit that distribution and once we hit this minus manipulation level, what can we see? Price started to go lower, distribute lower, right? So that is one aspect of this. Okay. Now, if you take this off and if you use the midnight statistics, what can we see? You can see that price also hit the bearish manipulation level that is statistically based on the midnight opening price. And then we headed into the distribution level. There are two distribution levels, distribution one, distribution two. If order flow is really strong, it will go for distribution two. Okay. After this, we can also see a potential reversal from here. So this could be the other low of the day forms. Yeah, low of the day forms. And if you are buying, which I did by the way, if you are buying, I can target this right here, 100,400. Almost, almost. And then that's we're heading into today's price action. Today, right now, what can we see? We can see that we are still surrounding the midnight opening price, right? And if you look at it from the perspective of the daily stats, you will see that we already hit the manipulation levels. You want to see if we can distribute higher a bit. Okay, so this is one of the many features in the statistical manipulation detection algorithm. Okay, now what you can also do is you can look at the market phases here, right? So it'll tell you if the current market phase is manipulation or distribution. And it'll look at the subdivisions of time and tell you, okay, within this time range, This is another manipulation or distribution. So if it is a manipulation, then okay, we're going to go and make a low and then we're going to go up. If it is a distribution, then we're going to go in the direction of the existing trend. It's as simple as that. Okay, so this will definitely help you out. Now, if you look at something else, that's all. Displacement. You know what the displacement is, right? It will show you the displacement candles as per my previous YouTube video. They show you all the displacement candles that you can use as a POI. Okay. And finally, what we're also going to release to our users is the 90-minute defining range, right? So you can use all of these information, all of these things, all of these data points. You can use this information to buy and sell accordingly, along with the entry algorithm on the 30-minute chart and the 1-hour chart. Okay, so what I'll do now is I'll show you a sample trade that I took, yesterday on gold. So on gold, if you guys are there in the public Telegram group, you all saw that I took a gold buy. Let me see where it was. I took a gold buy over here. Okay, so what did I see? Here's what I saw. Let's come here. Go to the 5-minute chart, all the while looking at the entry signals, right? Right there. Okay. All right. So what did I see? First of all, I got my initial buy somewhere here. I took it a bit early. Why? You can see these black color labels over here. That is indicative of volume spike. So yes, I got that coded as well. And yes, it is included in the new updates that I'm about to roll today, being the 23rd of November, 2024. When I see this volume spike and when I see price making a change in the state of delivery through an inverse gap, that is my signal to buy. Okay. That is my signal to buy. And where am I going to keep my my stop loss below the low? Take profit is going to be based on the statistical manipulation level. My bad, not the manipulation level, the statistical distribution level, which is at around 2714, right? So here, I'll show it to you towards the end. Yeah, okay. Now watch closely. I'll show you exactly the other trades that I took as well. Right, so now when price rallies, it needs to come down, right, into this defining range. When it came there, what I did was I took another buy. Okay, so I took another buy here, stop loss below here, and same TP. I took partials along the way. Okay, so I took my partials there, stop loss at break even, and then price hit my break even. Right there, hit my break even. Okay, after which I missed this trade. So it made the low of the day and it started going up. I missed the trade because my limit order was here at this inducement point. It did not come there. So what I did was when price broke higher right there, when price broke higher right there, I waited. See this? We broke up, induced. What I did was I went long. I bought here, stop loss at the 75%, and I kept my TP at this point. Okay, what was I closed my position here, and here's the funny part: I closed my position here. I did not expect that, for gold, market close would actually cause a massive rally. Unfortunately for me, it did. So it goes, hits my break even, and then just smashes higher into my TP. Okay, now looking at this, let me take out this algorithm and show you guys the statistical levels. Yeah. Now the statistical levels over here, what can we see? See that? Distribution level. Based on the midnight open, that is the distribution level, the statistical distribution level. And look at what price did it went there perfectly. Okay. And look at what else it reacted from. See how it did not come to the statistical manipulation level? Well, that happens with gold when it's like super one-sided, right? What will it tend to use? The midnight open. Yeah, you see that? Yeah. So that is essentially how you're going to be using this to catch the low of the day, high of the day, to catch trend continuations, to catch every single damn trade that you need. This is how it is. And look at this. The entry algorithm gave us the buy signal. See here, the buy I showed you guys over here, and the buy that I missed from down here, but took from up over here. That was where it stemmed from. Yeah. If you look at Bitcoin, you can see on Bitcoin yesterday, right? Yesterday, we had a buy signal here, price went up, all-time high, it just dumped, that's fine. And right now we are getting a buy signal over here, but the only problem is there's a lot of generated liquidity. Okay. And when we talk about generated liquidity, that is something that I'm going to keep for another video for another day. Yeah. Generated liquidity is essentially, you know how ICT teaches all these liquidity models on in his private mentorship. I mean, that's where everyone started copying it from, right? So the which is okay, right? Because everyone needs to know this. Trendline liquidity and double bottom, double top SNR based liquidity, they're actually quite important. Yeah, because you will see that a lot of the zero drawdown entries come from these types of inducements. Okay, for example, I'll just give you one example, right? So yesterday, when I took this Bitcoin buy here, can you see how we have that mitigations and the price goes up? Yeah, that is an inducement point. Okay. Now, if you drop down to the 5 minute chart, what you can see is that there's more, right? As you must see, if they mitigate that range, okay, it's gone, right? So if you do this and do that, you can see that okay, there's a trend line phantom, so to speak. Do that. Okay. Price hits, goes up. Look at the time, 8:40. Is that a correct time of day? No. We wait for one more rate there. Wait for the buy signal. Wait for the change of state, buy. That's what I did. Okay. Now you can go one step further and say, okay, where's my POI? Now I would prefer using an inverse gap. So an inverse gap would be around, let's see where it is. We'll come here. Let's go right here. Okay. We'll head to the 1 minute chart. On the 1 minute chart, we can see that the inverse gap is around here. See that? There. Okay. What are we going to do next? Go back. There we go. It goes up perfectly, right? So this is known as the engineered origins, right? So these engineered origins, or the origin point of inducements, they will give you the lowest possible stop loss. Now, I personally don't use it that much. My stop loss is still going to be medium to large in terms of its size. But yeah, this is how you can do it. And I will definitely dedicate another YouTube video just for this. Okay. Now, for everyone that is looking for the uh, algorithms, the Black Friday deal, get it. I need to get as many users as possible to show you guys that this is indeed possible. Okay. And in the future, many more features will come. If you have any suggestions on any algorithms that you want me to make, I will definitely make them for you with my team. Yeah. And with that said, I hope you found this insightful. See you in the next one. The link for the Black Friday deal is in the description below. Okay. Good luck and good trading. Bye bye.